Bill Ackman was nurtured, surrounded by ambition and certainty. His grandfather, Larry Ackman, started a private real estate empire that turned into annual millions. This thriving enterprise was then passed to his father. So from an early age, Bill learned invaluable lessons from his parents, industriousness and motivation. This is the highlight of today's video. The story of Bill Ackman and his way of marking his individuality in the world of business. Hello and welcome to Finance Revisited, where we will be exploring topics dedicated to the fascinating world of finance and beyond. Continuing on, Ackman's college admission to Harvard was assured, given his near-perfect SAT scores. Following graduation from the university, he dedicated 2 years to working closely with his father. However, there is a growing ambition to start his own. It was an aspiration to construct a business empire of unmatched scale and influence, one that aimed to surpass his family's established legacy. Ackman was a bit lost when it came to deciding what kind of business to venture into, until he crossed paths with Warren Buffett, a titan in the investment world. Through connections within his family, Ackman found himself face-to-face with Buffett, who quickly became a mentor as he took his initial steps in his career. While he admired Buffett's success, Ackman still wanted to stay true to his own vision and style. The 1990s were marked by economic turmoil following the Black Monday crash. This was a time of uncertainty, yet within this unstable landscape, the hedge fund industry was bustling with activity. It was during this period that Ackman decided to invest his $40,000 savings into something familiar to him: real estate. His target was Alexander's, a company holding a number of retail stores across New York. By 1992, Alexander's was on the brink of bankruptcy, a situation that might have deterred many investors. However, Ackman saw this as an opportunity. Seeing potential where others saw peril, he invested in the company. As Alexander's emerged from the brink of financial collapse, its stock value soared. This move resulted in Ackman reaping almost 3 times the amount of his initial investment, a significant triumph for his early career. By that same year, Ackman, alongside his friend Dave Berkowitz, launched Gotham Partners, a modest yet ambitious investment club, a hedge fund in its infancy. Leveraging connections within wealthy circles, they successfully amassed $3.2 million in capital. Gotham Partners adopted an aggressive stance, investing in undervalued stocks, resulting in a remarkable 20% return within a single year. Armed with impressive track record, Ackman tapped into his network once again, securing an additional $20 million in funds. Seeking further career expansion, Ackman became an activist investor. The movement arose during the collapse of Rockefeller companies. Despite their financial standing, Ackman seized the chance to amass a substantial stake, teaming up with Joseph Steinberg, a prominent business figure. They acquired 7% ownership of the struggling company. While Ackman fell short of gaining the control he initially sought, the investment proved to be a success, yielding Gotham Partners a remarkable 39% return. This triumph gained the respect of Wall Street titans, who became his investors. As the hedge fund industry continued its upward trajectory, by the age of 30, Ackman's brainchild, Gotham Partners, was valued at a staggering $500 million. This rise cemented Ackman's status as a force within the investment world, setting the stage for his future exploits. Following heavy investment in Gotham Golf, Ackman faced a challenging scenario. The real estate values plummeted without a corresponding reduction in expenses. Compounded by the structure of his company as a hedge fund, investors began withdrawing their funds, seeking an exit strategy. Ackman found a potential solution in Prepaid Legal Services Incorporation, now known as Legal Shield, a multi-level marketing firm, a company with a contentious reputation as a pyramid scheme. Unfortunately, His investment led to legal woes when MBIA filed a lawsuit related to Ackman's involvement with the prepaid legal service, making it look worse for his investors. Amid these circumstances, Ackman sought resolution through a deal with Icon, aiming to liquidate his stocks to meet the demands of withdrawing investors. However, a controversy arose. With Hallwood Realty displaying substantial promise, Icon acquired its shares, reaping a whopping 72% profit. Yet, an intricate clause within the agreement between Ackman and Icon surfaced. Ackman had inserted a provision stipulating that if Icon achieved a 10% profit, Ackman was entitled to half of it. When Icon refused to honor this clause, Ackman resorted to legal recourse. The matter landed in court, where the ruling favored Ackman, compelling Icon to pay a sum of $9 million as per agreement's term. This legal victory served as a testament to Ackman's willingness to navigate complex situations to protect his interests. After reestablishing trust and regaining investor confidence, Ackman refocused on active investing. He sought out companies with substantial real estate holdings, targeting restaurants and retail stores. One notable success came in July 2005, when Ackman initiated a campaign urging Wendy's to spin off Tim Hortons. This move made Wendy's shares go up from $30 at Ackman's initial purchase to a soaring $50. Similarly, he made a successful campaign with McDonald's, yielding a remarkable 100% profit. These victories propelled Pershing Square Holdings to manage assets totaling at $10 billion. However, struggles loomed once more with a downturn of JCPenney, a retail store chain. Ackman faced a setback, losing half of his investments in the company. Seeking a new avenue for his investment career, Ackman identified an opportunity. Following the passing of Hughes, Herbalife's former CEO, Mike Johnson, the new CEO, steered Herbalife towards a rebranding effort for a better company image. Despite rebranding, Ackman publicly decried Herbalife as a pyramid scheme, sparking a contentious battle. The situation escalated when Herbalife launched a counter-campaign to defend its reputation, enlisting the support of Dan Loeb, a move that rattled Ackman, considering Loeb was a friend. This clash within the investment world unfolded as a high-stakes battle between Ackman and Herbalife, marked by public accusations. It continued on when Carl Icahn threw his weight under Herbalife, aiming to bolster its credibility. To enhance the company's legitimacy, they appointed Dr. Richard Carmona to their board, a former U.S. Surgeon General. In response, the FTC and FBI launched investigations into Herbalife, triggering a significant slump in the company's stock, plummeting it to 14%. However, the Federal Trade Commission's stance on Herbalife's business model brought mixed tidings. While it didn't label the company as a pyramid scheme, the outcome left both positive and negative repercussions. Seizing an opportunity in this period, Icahn sought to reconcile by offering Ackman a share of his Herbalife holdings. However, instead of a gesture of peace, Ackman turned it against Icahn. He leaked this development to the media, sparking public uncertainty and panic behind the exchange. To stop the ensuing panic, Icahn swiftly countered by purchasing additional Herbalife stocks, stabilizing the situation. Continuing his investment journey, Ackman put a lot of hope in Valiant Pharmaceuticals in hopes that it would become a big win. But things didn't go as planned. He ended up losing $4 billion. It hit his career hard, especially because Herbalife stocks were getting back on track around the same time. This roller coaster ride showed how uncertain investing can be. Remembering tough times, Ackman once said, "If you deal with failure well and you persist, you know you have a high probability of being successful." He took this to heart, learning from his mistakes. Despite the setbacks, by 2019, Ackman's hedge fund was bouncing back, making a solid 57% return. His company, Pershing Square, was on the rise again. But just when things seemed brighter, the COVID-19 pandemic hit. Amidst all the chaos, Ackman managed to make a $2 billion profit in a few short months during the pandemic. This showed his ability to handle tough situations. Bill Ackman embodies intelligence and tenacity, a force to be reckoned with in the world of finance. His journey, marked by bold moves and resilient comebacks, highlights his determination to succeed. Intelligent yet stubborn in all the right ways, Ackman's ability to learn from setbacks and transform them into opportunities defines his legacy. Through the highs and lows of his career, he is a testament to the power of perseverance in the ever-evolving landscape of investment. And if you've enjoyed this video, give this channel some support by clicking on the subscribe button and sharing your thoughts in the comment section below. Stay updated on our upcoming content by hitting the notification bell so you'll always get notified on our next one. Until next time!